Welcome to the Bitcoin Street Journal podcast. I'm Autumn, your resident Bitcoin maximalist, and oh my Satoshi, do we have an absolutely incredible show for you today. September 4th, 2025, and Bitcoin is sitting pretty at $110,919. Can you believe it? We told you this was coming.
And I'm Darren, your co-host and fellow Orange Pill evangelist. Autumn, the energy in the Bitcoin space right now is absolutely electric. We're witnessing history unfold before our very eyes. The institutions are capitulating. The mining powerhouses are reaching unprecedented heights. And the FUD machine is being systematically destroyed by Bitcoin's relentless march toward global monetary dominance.
That's right, Darren. Today we're diving deep into the most explosive Bitcoin news of the week. We've got mining companies absolutely crushing earnings records, September proving once again that Bitcoin doesn't care about your seasonal FUD, El Salvador leading the global adoption charge like the absolute legends they are, and yes, we're gonna roast some altcoins because somebody has to tell the truth around here.
Before we jump into the meat and potatoes, let's address the elephant in the room. Bitcoin at $110,000. This isn't a fluke. This isn't a bubble. This is mathematical inevitability playing out exactly as we predicted. The 21 million hard cap isn't just a number, it's a promise that your purchasing power will be preserved in a world gone mad with infinite money printing.
Exactly. And speaking of market updates, let's dive into the numbers that are making traditional finance shake in their boots. Bitcoin's market cap has officially surpassed $2.1 trillion. That's larger than most countries' entire GDP. We're seeing institutional adoption at levels that were unimaginable just 5 years ago. MicroStrategy, Tesla, Square, they were just the beginning, people.
The hash rate is sitting at an all-time high of 850 exahashes per second. That's 850 quintillion hashes every single second, securing the most powerful computer network in human history. This level of computational power makes Bitcoin absolutely unstoppable. No government, no corporation, no coalition of bad actors can stop this train.
And the Lightning Network? Oh my goodness! We're looking at over 15,000 public nodes with a network capacity exceeding 5,000 Bitcoin. Instant, cheap, final settlements happening every millisecond across the globe. This is the payment rails of the future, happening right now.
Now let's talk about the powerhouse explosion happening in Bitcoin mining. Marathon Digital just reported their Q3 earnings, and folks, these numbers are staggering. They mined 4,200 Bitcoin in the quarter, representing a 47% increase year over year. Their revenue hit $312 million, with profit margins that would make any traditional business weep with envy.
But that's just the beginning. Riot Platforms announced they're expanding their Texas facilities with 50,000 additional next-gen ASIC miners. This isn't just growth, this is explosive expansion that's reshaping the entire mining landscape. They're projecting their hash rate to exceed 30 exahashes by year-end.
And here's what the mainstream media won't tell you about these mining companies. They're not just businesses. They're the guardians of the Bitcoin network. Every hash they contribute makes Bitcoin more secure, more decentralized, more unstoppable. When Marathon and Riot expand, they're literally fortifying the foundation of the future global monetary system.
CleanSpark just dropped their bombshell announcement, too. They've secured financing for another 200 megawatts of mining capacity in Georgia. That's enough power to mine approximately 800 Bitcoin per month at current difficulty levels. These companies aren't just profitable, they're printing money in the most literal sense.
What we're witnessing is the industrialization of Bitcoin mining transitioning into the optimization phase. These aren't garage operations anymore. We're talking about multi-billion-dollar enterprises with sophisticated renewable energy partnerships, cutting-edge cooling technologies, and operational efficiencies that rival any Fortune 500 company.
Now, let's talk about how Bitcoin is destroying the September FUD once and for all. Every single year, the same broken record plays. Bitcoin always crashes in September. September is historically bad for Bitcoin. Sell in September and come back in October. Wrong, wrong, wrong.
Bitcoin has gained 18% this September alone. 18%! While traditional markets are wobbling, while precious metals are stagnating, while altcoins are bleeding out, Bitcoin is doing what Bitcoin does best, going up. The September curse is officially broken and it's never coming back.
You know what's driving this September strength? Institutional FOMO. The same institutions that spent years spreading FUD are now scrambling to get exposure. BlackRock's Bitcoin ETF just crossed $35 billion in assets under management. Fidelity isn't far behind with $28 billion. These aren't retail investors panic buying. This is smart money recognizing inevitability.
The macro environment is perfectly aligned for Bitcoin's continued ascent. Federal Reserve policy remains dovish, inflation concerns persist despite official narratives, and global debt levels continue reaching astronomical heights. Bitcoin isn't just performing well in September, it's performing because it's the only rational response to coordinated monetary debasement.
Let's pivot to the absolute heroes of Bitcoin adoption, El Salvador and their fearless leader, President Bukele. While other world leaders are still trying to figure out what Bitcoin even is, El Salvador just announced they've crossed the threshold of 3,000 Bitcoin in their treasury reserves. 3,000 Bitcoin!
But it gets better. El Salvador's Bitcoin education program has reached over 2 million citizens, 2 million people who now understand the difference between sound money and fiat currency debasement. They're not just buying Bitcoin, they're building a Bitcoin native economy from the ground up. This is what real adoption looks like.
And the ripple effects are incredible. Panama's exploring similar legislation. Paraguay is considering Bitcoin legal tender status. Even Argentina, despite their government's resistance, is seeing massive grassroots Bitcoin adoption as their peso continues its inevitable march towards zero. The dominoes are falling, and they're falling fast.
The Bitcoin circular economy in El Salvador is thriving beyond anyone's wildest expectations. Local businesses report that Bitcoin transactions now represent over 30% of their daily volume. Tourism has increased by 200% since Bitcoin adoption, with Bitcoin enthusiasts from around the world flocking to experience the future of money firsthand.
All right, Bitcoin maximalists, it's time for everyone's favorite segment, altcoin roasting time. Grab your popcorn because we're about to serve up some brutal truth about the casino chip carnival that refuses to die. Let's start with Ethereum, shall we?
Oh, Ethereum, the world computer that can't even handle a moderately popular NFT drop without gas fees exploding to hundreds of dollars? They promised us ultrasound money and delivered ultrasound nonsense. While Bitcoin's monetary policy is set in mathematical stone, Ethereum continues changing its rules like a rigged casino, adjusting the odds mid-game.
And don't even get me started on Cardano. Peer-reviewed research, they said. Academic rigor, they promised. Years of development, and what do we have to show for it? A blockchain that moves slower than government bureaucracy and smart contracts that are about as smart as a box of rocks. Meanwhile, Bitcoin just works. Every single day, for 7 years straight.
Let's talk about Solana, the Ethereum killer that kills itself more often than anything else. How many times has the Solana network gone down this year? I've lost count. But hey, at least the outages are consistent. You know what's never gone down in over a decade? The Bitcoin network. Uptime is not negotiable when you're building the foundation of global finance.
And can we please talk about all these Bitcoin killers that were supposed to dethrone the king? Where are they now? Remember Bitcoin Cash? Bigger blocks, they screamed. Cheaper fees, they promised. Now it's trading at what? 2% of Bitcoin's value? Next. Remember Bitcoin SV? Craig Wright's fever dream that was going to restore the original vision? Yeah. How's that working out?
The fundamental problem with every single altcoin is that they're solutions looking for problems that don't exist. Bitcoin solved the only problem that mattered: how to create digital scarcity without a trusted third party. Everything else is just elaborate theater designed to separate you from your Bitcoin. Stay humble, stack sats, ignore the noise.
Time for our lightning round and educational moment. Darren, give our listeners the most important Bitcoin concept they need to understand right now.
Time preference. Bitcoin is teaching humanity about low time preference thinking. Instead of consuming everything immediately, Bitcoin rewards patience, saving, and long-term thinking. When you hold Bitcoin, you're not just holding an asset, you're participating in a global shift towards sustainable, thoughtful economic behavior. This is why Bitcoin fixes everything.
Perfectly said. Quick question for our audience. At current prices, how many Satoshis can you get for $100? Remember, there are 100 million Satoshis in one Bitcoin. Do the math, stack accordingly, and remember, every Satoshi matters when we're heading to hyper-Bitcoinization.
Daily reminder: dollar cost averaging into Bitcoin isn't just an investment strategy, it's a life strategy. The fiat system is designed to steal your purchasing power through inflation. Bitcoin is designed to preserve and grow your purchasing power through absolute scarcity. Choose wisely.
As we wrap up today's explosive episode of the Bitcoin Street Journal podcast, let's remember what we've witnessed. Bitcoin at $110,000 isn't the end. It's just the beginning. Mining companies are stronger than ever. September FUD has been obliterated, global adoption is accelerating, and the altcoin noise is fading into irrelevance where it belongs.
The future is Bitcoin, the future is now, and the future is unstoppable. To everyone listening, whether you're a seasoned Bitcoin veteran or someone just discovering the orange pill, remember this: you're not just investing in Bitcoin, you're investing in human freedom, economic sovereignty, and a world where your wealth can't be debased by central bank printing presses.
Keep stacking those sats, keep spreading the orange pill, and keep believing in the inevitable Bitcoin future. This has been Autumn and Darren from the Bitcoin Street Journal podcast. Until next time, remember, Bitcoin fixes everything.
Stay humble, stack sats, and we'll see you next week when Bitcoin is probably at $120,000. Peace out, Bitcoin maximalists.
But wait, we're not done yet. Before we sign off, we absolutely need to talk about the elephant in the room that's getting bigger every single day: central bank digital currencies. The CBDCs are coming, people, and they represent everything Bitcoin stands against. While we're celebrating our decentralized, permissionless, censorship-resistant digital gold, governments worldwide are rushing to create their own digital surveillance coins.
Autumn, this is exactly why Bitcoin's timing is so perfect. While China rolls out their digital yuan with complete transaction surveillance, while the European Central Bank prepares their digital euro with programmable spending controls, while the Federal Reserve quietly develops their Fed coin with expiration dates, Bitcoin stands as the only alternative that preserves financial privacy and individual sovereignty. The contrast couldn't be clearer.
CBDCs are literally the antithesis of everything we stand for. Imagine money that can be turned off by bureaucrats, spending that can be restricted by algorithms, savings that can expire if you don't spend them fast enough. This isn't science fiction. This is what central banks are actively developing right now. Thank Satoshi, we have Bitcoin as the escape hatch from this dystopian nightmare.
Speaking of global developments, let's talk about the massive infrastructure build-out happening in Bitcoin mining. We're seeing renewable energy partnerships that make evangelists scratch their heads. Bitcoin miners are literally incentivizing the development of stranded renewable energy sources: solar farms in Texas, geothermal in Iceland, hydroelectric in Paraguay. Bitcoin is turning wasted energy into digital gold.
The ESG narrative around Bitcoin is crumbling faster than Terra Luna. Studies are now showing that Bitcoin mining uses more renewable energy than most traditional industries. The Bitcoin Mining Council reported that over 70% of mining operations are now powered by sustainable energy sources. Meanwhile, traditional banking requires massive physical infrastructure, millions of employees commuting daily, and endless paper processing. Bitcoin fixes the environment too.
Let's dive deeper into the technological developments that are making Bitcoin even more unstoppable. Taproot adoption has reached unprecedented levels, giving us enhanced privacy, improved script capabilities, and more efficient use of block space. The Lightning Network is processing over 5 million transactions per day now, with channel capacity growing exponentially. This is scaling happening in real time.
And can we talk about the insane innovation happening in Bitcoin Layer 2 solutions? We've got RGD smart contracts giving us programmability without sacrificing Bitcoin's security model. We've got Liquid Network enabling confidential transactions for institutions. We've got Fediment bringing community banking to Bitcoin. The ecosystem is exploding with innovation while maintaining the rock-solid foundation of base layer Bitcoin.
The institutional custody solutions are reaching bank-grade security levels. We're talking about multi-signature setups with geographic distribution, hardware security modules, and insurance coverage that exceeds traditional banking standards. Coinbase Custody, BitGo, and Fireblocks are handling billions in institutional Bitcoin holdings. The infrastructure for institutional adoption isn't coming, it's here.
Let's talk about the demographic shift that nobody's discussing. Millennials and Gen Z aren't just buying Bitcoin, they're preferring it over traditional assets. Recent surveys show that over 60% of investors under 35 consider Bitcoin their primary long-term investment vehicle. They understand that their retirement won't be funded by Social Security or corporate pensions. It'll be funded by Bitcoin.
The generational wealth transfer is happening right now, and it's flowing into Bitcoin. Baby boomers might not understand digital assets, but they understand results. When their millennial children's Bitcoin portfolios are outperforming their traditional investment accounts by 5-to-1 margins, the conversation changes quickly. We're witnessing the largest wealth transfer in human history, and it's denominated in Satoshis.
Corporate treasuries are getting wrecked by inflation, while Bitcoin corporate adopters are laughing all the way to hyper-Bitcoinization. Companies holding significant Bitcoin reserves, MicroStrategy, Tesla, Block, their Bitcoin holdings are now worth more than their entire market caps from just 5 years ago. This isn't speculation anymore. This is corporate survival strategy.
The nation-state FOMO is becoming undeniable. Beyond El Salvador's leadership, we're seeing strategic Bitcoin accumulation by governments who understand that the first movers will have massive advantages. Bhutan has been mining Bitcoin with hydroelectric power for years. Ukraine accepted Bitcoin donations during wartime. Even the United States government holds over 200,000 Bitcoin from various seizures, and they're starting to realize maybe they shouldn't sell it.
Speaking of governments, let's address the absurdity of regulatory FUD that keeps recycling every few months. Bitcoin will be banned, they cry. Really? Try banning mathematics. Try banning cryptographic signatures. Try banning peer-to-peer networks. Bitcoin exists in the realm of pure information. You might as well try to ban the internet itself. Every ban just makes Bitcoin stronger and more valuable.
The regulatory landscape is actually improving dramatically. The European Union's MiCA regulation provides clarity for Bitcoin operations. The United States is moving towards sensible Bitcoin ETF approval processes. Singapore, Switzerland, and Germany have created Bitcoin-friendly regulatory frameworks. Smart regulators are realizing that embracing Bitcoin innovation keeps their financial sectors competitive on the global stage.
Now let's talk about Bitcoin education, because this is where the real revolution is happening. Universities are adding Bitcoin and cryptocurrency courses to their curricula. MIT, Stanford, NYU, they're teaching the next generation of economists, computer scientists, and business leaders about Bitcoin fundamentals. We're creating an army of Bitcoin native thinkers who will never accept fiat system limitations.
The grassroots Bitcoin education movement is unstoppable. Bitcoin meetups in every major city, Bitcoin conferences drawing tens of thousands of attendees every month, Bitcoin podcasts reaching millions of listeners monthly. The orange pilling is happening at exponential rates. People are learning about monetary history, Austrian economics, and sound money principles. This isn't just financial education, this is economic awakening.
Let's talk about the game-changing developments in Bitcoin self-custody. Hardware wallet adoption is exploding. Ledger, Trezor, Coldcard. These devices are becoming as common as smartphones among serious Bitcoiners. Multi-signature setups, time-locked transactions, inheritance planning. We're seeing Bitcoin hodlers become their own banks with security that exceeds traditional financial institutions.
The phrase, not your keys, not your coins, has become more than just a meme. It's become a life philosophy. Bitcoiners are learning operational security, understanding private key management, and taking personal responsibility for their wealth in ways that previous generations never could. This isn't just about money, this is about sovereignty, independence, and financial self-determination.
The Bitcoin circular economy is expanding beyond anyone's wildest dreams. We've got Bitcoin-only businesses, Bitcoin salary payments, Bitcoin mortgage companies, Bitcoin retirement accounts. People are living entirely on Bitcoin Standard. No more conversion to fiat, no more banking intermediaries, no more monetary middlemen. This is the future of commerce, and it's happening right now.
The innovation in Bitcoin native financial services is mind-blowing. Bitcoin-backed loans without selling your stack. Bitcoin yield generation through Lightning routing. Decentralized Bitcoin exchanges with atomic swaps. We're building an entire parallel financial system that operates on Bitcoin rails without the inefficiencies and corruption of traditional banking.
Let's address the elephant in the room that traditional finance doesn't want to discuss: Bitcoin's deflationary pressure on everything else. As Bitcoin adoption increases, as more capital flows into this finite asset, as more businesses accept Bitcoin payments, the purchasing power of Bitcoin increases, while everything else becomes cheaper in Bitcoin terms. We are witnessing the greatest wealth preservation mechanism in human history.
The macroeconomic implications are staggering. In a Bitcoin standard world, prices naturally decrease over time as productivity improvements aren't stolen by monetary inflation. Goods and services become more affordable, innovation is rewarded, and savings actually grow in purchasing power. This isn't just about investment returns. This is about fixing the fundamental distortions created by fiat monetary systems.
Can we talk about the incredible resilience Bitcoin has shown through every crisis? COVID-19 pandemic, Bitcoin thrived. Banking system stress, Bitcoin thrived. Inflation concerns, Bitcoin thrived. Geopolitical tensions, Bitcoin thrived. Every crisis proves that Bitcoin isn't correlated with traditional systems. It's the antidote to traditional system failures.
Bitcoin's anti-fragile nature is becoming more apparent with every market cycle. Traditional assets crash and take years to recover. Bitcoin crashes harder, but recovers faster and reaches new all-time highs. Each cycle creates stronger hands, better infrastructure, and wider adoption. What doesn't kill Bitcoin literally makes it stronger.
The network effects are becoming unstoppable. Every new Bitcoin user increases the value for every existing user. Every new merchant accepting Bitcoin increases utility for everyone. Every new developer building on Bitcoin strengthens the entire ecosystem. We are witnessing Metcalfe's law in action. The network's value grows exponentially with each new participant.